All right, good morning, everyone. Today I thought I'd talk about selling commercial properties. We talked last week about intro to commercial, little sale of business. The next thing we probably do is sale of the actual property, the commercial property. So what are different things that you're going to encounter with these properties and how to navigate it? So do you guys have any specific questions to start off with? Anything that you've worked on that you got a little bit confused that I can address, or anything you're currently working on, or maybe something you didn't take because you were nervous to kind of dabble in commercial properties?
I maybe you could cover something because a lot of the commercial deals don't just happen on the APS, like they have other maybe a VTB clause or something like that. So how much should we be involved in our clients like transactions like that?
Well, you have to take them from beginning to end, whether that be like, you actually telling them what the process is, or in the case of a vendor take back, you might want to direct them to a professional, right? So they're going to need to speak to their lawyer to drop that kind of document and stuff. We're capable to put a clause into the offer to say that there's going to be a vendor take back, but by no means are we putting all the terms of it in there, because it's basically like writing a mortgage at the end of the day. So we don't know how to properly govern or properly protect our clients in a vendor take back situation, right? But we can put our clauses in there because very often there is, you're right. These purchase prices are sometimes hard to reach. People don't get approved for them. So a lot of commercial people selling a commercial property will do a vendor take back at the end of the day, for sure. We should always try to direct people to professionals though, lawyers, accountants, whatever they need at the end of the day, because commercial can definitely get tricky, right? So we're just going to talk a little bit. I'm going to start off with, how do you evaluate a commercial property? Okay, so we're going to pretend, for instance, you've come across a plaza and your client would like to purchase this property. We're going to pretend we're the buyer agent, right? And they are asking you, is this a good property to buy? Right? So what should you be doing? You should be gathering information for your client, right? Not all the information will be readily available online. You probably have to contact the listing agent to get the information. But you're going to want to find out what the net operating income is of the property, okay? For a couple different reasons. You want to know what the expenses are, right? What the income is coming in. But you also want to be able to figure out the cap rate. What is cap rate? Cap rate is just telling what sort of capitalization is happening on the commercial property, right? People find this really important. So very often I'll get a commercial client, and they'll say, don't send me anything unless it's between a cap rate of 4 to 6. That's the only thing I'm interested in, right? Some people will take something with crappier cap rate because maybe they know how to run the business better. Maybe they have a better property management. They know how to get it rented. They know how to run it better. Maybe they have access to different resources that, lower their costs. And then they'll be able to get the property for less of a purchase price and fix it. So it doesn't necessarily mean that if a property has a bad cap rate, it's not going to sell. There's always a buyer out there, but generally we're looking for good cap rates, right? So we're going to talk about net operating income for a little bit, because you guys need to fully understand what that is and how to calculate what the cap rate is based on that, right? So the net operating income is profitability formula. It's often used in real estate to measure the commercial property's profit potential and financial health by calculating the income after all the operating expenses are deducted. So in other words, it measures the cash flow of the property after all necessary expenses have been paid, right? So like I was saying, real estate investors and creditors, our clients that we're use this calculation to evaluate the cash flows of a specific property to determine whether it's a good investment or credit worthy. So banks will also use the cap rates and see what the net operating income is as well, right? So you might be asked that if this property is being funded by the bank, right? They also use this ratio to formulate an initial value of the property. So it helps you evaluate as well when you're the listing agent, what you're going to put it up. It's hard in commercial. It's really hard being a listing agent sometimes because no two products are the same. You might be listing a plaza and there might be a lot of sales, say on Kennedy, but this plaza has, 10 low-rise single stores to rent out, whereas, the next door was a big industrial space. And then 2 doors down was a 2-story with some offices upstairs and some restaurants and stuff downstairs. So it all just depends on what the product is. And it's really hard to just go and compare and look at the past sales like we do with residential. Residential resale is really easy. We can find a lot of products that are similar to each other, right? So we also use this to, check out what the value is for the property when we're listing a property. For example, we look at how much money the property can generate. So why is your client buying purchasing a commercial property? Whereas residential resale, they might be purchasing a property to live in. It's not always an investment. Commercial is usually 100% always an investment they're putting in. They want to see the cash flow is what money they're going to be generating from this property. So there are many different ways a piece of property can generate income. Investors and creditors need to include all revenues in their evaluation. For example, the rental property can generate cash from renting apartments, charging parking fees, servicing vending machines, operating laundry machines. All of the activities can contribute to the cash flow of the property. So it's not just as simple as, okay, you know what, I have this 6-plex and I rent it. So here is my cash flow is all coming from the rent. Very often they'll have a mutual laundry room, and down there it's, coin operated. That goes into the revenue stream, and that gets calculated in for the net operating income. This concept isn't exclusive to real estate. Other industries refer to this calculation as EBIT, or earnings before interest and taxes, and use it to base investment decisions on it as well. So we're going to look at how we calculate the net operating income. Okay, so the formula of net operating income is gross income minus operating expenses, which is pretty straightforward, right? So like they said before, revenues include more than just the rental income of the property. It includes revenues from a piece of real estate. So what's coming out of there? So let's just pretend we have this, like I said, 6-plex. So we're going to look at the rental income, the parking fees. So we're charging them for parking spots monthly, maybe service charges, vending machines we might have in the building, laundry machines that they're renting, coin operated laundry, and the operating expenses in the net operating formula. We're going to say that there's property management fees, there's insurance we're paying on the building, utilities, property taxes, repairs and maintenance. This all falls into it. And you have to be really mindful, especially when you're the purchasing agent. A lot of people aren't used to listing commercial online. I know, for instance, I was looking at a plaza, I don't know, I want to say about 6 months ago with a client, and they said, oh yeah, no, it's great. These are all the rents and these are all the expenses. And I kind of looked at it and I thought, well, I automatically know that this expense sheet is incorrect, because I'm like, they had no maintenance for the parking lot. I said, is there no company that does the snow removal? Oh yeah, there is. Okay, could you find out what the cost of that is? Who mows the lawns and the gardens in this area? Who does? So you kind of have to not just rely on what they're saying, you have to think of everything, because a lot of these guys, maybe they don't do it intentionally. Sometimes they do. They might want to be pushing down what the expenses are. So unless you're mindful and you kind of put you have to think about what the possible expenses are of the building, and each product, like I say, is so different in commercial that you really have to think, what is it? So I knew automatically, I was like, there's no expenses for the parking lot snow removal, there's no expenses for the lawn mowing. And when you take that into consideration, of course, you're lowering the cap rate, because now there's more operating expenses, right? Keep in mind there's several different expenses that are not included in this category, like income tax and interest expense. As you can see, net operating income equation is pretty simple, really simple. So you just take, what are my cash flow? What are my expenses? Minus the 2, that's your net operating income. So they just give you a quick example here. Marsha owns a real estate business that purchases existing rental properties and potential rental properties. She's constantly looking for new real estate to invest in that she can either improve or run more efficiently than current owners. Today, she's evaluating 2 small apartment buildings that show the following items on their annual statement. So apartment number 1 has rental income of $100,000 a year, property management fees, $20,000, property taxes, $15,000, repairs, $20,000, and insurance, $10,000. The property number 2 has a rental income of $50,000. So you're looking, oh, wow, it's a lot lower. The property management fees are $1,000. property taxes are 1,000, repairs are 1,000, and insurance is 2,000. So we're going to see what the net operating income is of apartment 1 and 2. So as you see, we see $100,000 income, right? And we have $65,000 worth of expenses, which gives us $35,000. Apartment 2, you hear that the rents are not as much. You're like 50,000. That's half the amount that the apartment 1 is making. But maybe apartment 2 is newer and it doesn't have as much repairs happening to it. Maybe apartment 1's not run as well. Maybe the property management company's overcharging. Somehow along the way, when you minus the expenses, which aren't that much, they turn out to be making more money. They have more net operating income. They have more cash flow at the end of the year. It's $45,000, right? So you really have to think, like I say, there's a lot more that goes into evaluating whether a rental property is worth investing in this calculation. And they're talking specifically rental properties here, but you do cap rates even for plazas, office spaces. We're not just talking where people live, right? Anywhere where they'd be renting a space off of the commercial owner, right? So anybody have any questions on that so far? It's pretty straightforward. Have you guys ever had to try to calculate the net operating income for anything? Have you tried to purchase anything commercial for your clients? No, you guys are good so far? Okay, so we're just going to go into how we figure out what the cap rate is now, that property. Now that we've taken that and we've got the net operating income, we're going to go and figure out the cap rates. Oh, sorry, I'm just missing a question there. Yes, but business gives tough time getting profit statements. So you don't necessarily need like the profit statement. You just want to get the breakdown from them. So I don't need their official profit statement. I don't need their accounting documents. And a lot of times people make you sign a non-disclosure agreement. So let me just open that up while we're on it, talking about it right now. They usually have a non-disclosure agreement. So this is one that I've drawn up actually personally for to throw up with my listings, any commercial listings I've had. And it just basically says, we, in consideration for access to information submitted to us pertaining to this transaction, will keep all information provided relating to the business, marketing plans, discussions, or disclose this information solely to individuals that have signed a non-disclosure agreement. It's basically just saying that you're going to keep everything private because people are releasing these documents to you, right? So if you do get the profit statement, that's fine, but you don't even need that much. You can just ask the basics, right? Because you're going to want to figure out what they are. So what you want to see from the listing agent, if you're purchasing it, is basically this. Okay, I have a plaza. It has 3 restaurants, a doctor's office, and a vet. What is everybody paying for rent? Okay, great. So now I have what my cash flow is, what my income is coming in. Now, what are the expenses for this? They'll just give you the breakdown. Well, they pay this much for property management, this much for snow removal. They just fixed the roof last year. You know, usually the taxes are this much, right? Taxes, maintenance, and insurance is what you're looking at. You guys see that TMI very often, that your commercial lease clients are paying. This is what you're looking for. What are the taxes, maintenance, and insurance for the landlord? So just touching on TMI a little bit. When you have a commercial lease client from the other end, so your client I've been talking about is being the commercial purchaser of this building, right? He is going to take that TMI now and put it out there at a per square foot price or a flat rate price for your commercial lease clients. Most of the time when you go in there, the reason they separate the rent from the TMI is the TMI has to be actual. Okay. So when you go with a commercial lease client, you can't be negotiating that TMI. Okay. The only portion that's usually negotiable is the actual price per square foot, the net rent. And the reason being is the net rent is usually what the market value is, or how, whatever the landlord wants to charge, but the TMI is the actual. So at the end of the day, you're looking for the same thing as if you're the landlord purchasing the commercial building or the commercial lease client going to lease this a space in their building. You want to know what the taxes, the maintenance, insurance are actually for that property, right? They have to be an actual amount, and it just is divided equally over all the tenants. So it would be a price per square foot usually, because maybe unit A, has 1,000 square feet, but unit B has 1,500 square feet. They're not always exactly equal size. And that's why they do a price per square foot, because then it's fair for all tenants. Okay. So we're just going to go over how we calculate the cap rate now. Okay. So cap rate. What is a cap rate? Capitalization rate, or cap rate for short, is commonly used in real estate and refers to the rate of return on a property based on the net operating income. So we just talked about how to calculate that net operating income that the property generates. In other words, capitalization rate is a return metric that is used to determine the potential return on an investment or payback of capital. Okay, so how fast are you going to pay back, right? Cap rate formula. The formula for cap rate is equal to net operating income divided by the current market value of the asset. Okay, so once you've taken all of those expenses and all of those income coming in, and you figure out what the net operating income is, you're now going to take the net operating income and divide it by the current market value of the asset. So what does that mean? That's the purchase price, right? So this property is going for 1.4 million. And we saw there that apartment B was listed at 35. Sorry, the net operating income was 35,000. We're going to take 35,000 and divide it by 1.4, right? So just for the fun of it, if throwing out those numbers, I'll try and calculate what that is. So 35,000 for apartment 2 that we were just talking about, divided by 1.4, right? It's the 2.5 cap rate. Okay. So yeah, it's low, right? So you're going to say, oh my goodness, right? So net operating income is the annual income generated by the property after deducting all expenses that are incurred from operations, including managing the property and paying taxes. The current market value of the asset is the value of an asset on the marketplace. Basically, we're just looking at purchase price. It's a fancy way to say purchase price, right? So what is the importance of the cap rate? Why are we going to talk on and on and on about cap rates with our clients? And it sounds like it's really daunting, but once you get used to it, it's really, really quick. And you can just quickly phone listing agents, get the information together, maybe look at 2 or 3 properties for your clients and say, okay, this one has the best cap rate. I think this is the best for the value, the best for the purchase price. You'll get used to doing it quickly. As long as you understand what you're doing, you can do it fairly quickly. Right? So what's the importance of the capitalization rate to your clients? It's used to compare different investment opportunities. So for example, if all else equal, a property with 10% cap rate versus a property with 3%, an investor is most likely to focus on the property with a 10% cap rate. 10% cap rate is awesome. I haven't sold one with 10%. I haven't seen it. You know what I mean? Usually my clients are excited if I'm getting them a 6%, but we'll see. The rate also includes the amount of time it takes to recover an investment of property. For example, if a property comes with 10% cap rate, it'll take 10 years for the investor to recover his investment, called fully capitalized, okay? Although it's an important metric in comparing investment properties, investors should never base a purchase on the cap rate of the property alone. It's useful to note that different cap rates represent different levels of risk. A low cap rate implies lower risk, while a high cap rate implies higher risk. Therefore, there's no optimal cap rate. It depends on the investor's risk preference. It also depends on the investor. Like I was saying, if your investor is really versed at running apartment buildings, like he was a superintendent for 20 years in a building, and he knows how to run this, and he knows how to take those expenses down, he can improve his own cap rate over time. Maybe they come in and they can see the flaws of a mismanaged building and they know they can fix that. So they're going to say, you know, the cap rate is really, really low in this building. It's only 2%, for instance, that one that I just did the calculation on, only 2%, but I know I can come in and manage it better, and I'm going to get it for a good price. 1.4 is good. This should really go for 2 million or something like that, right? Anyways, so it's not solely based on cap rate. You shouldn't say, oh, you shouldn't buy this to your client. There might be different reasons they can come in and purchase this property based on risk and based on also, I think, on their experience, right? It's important. For example, consider 2 properties in different geographical locations. One is highly coveted suburban region, while the other is a rundown part of the city. The property in the highly coveted suburban region would show a lower cap rate, though the high market value of the asset. On the contrary, the property located in the rundown part of the city will come up with a higher cap rate reflected by the lower market value of the asset. So that's something else to consider as well. Where is it? What's the geographical location? A lot of times we talk about foot traffic. So you want to look at what kind of foot traffic they're having. What sort of influences around also is important when you're purchasing for your client or even listing for your client. So the popularity of the building. So perhaps this plaza is being sold, but there's 2 big condo towers going up right beside it. right? So even though the last time a similar plaza or the cap rate or however you're assessing the value of this property was 1.4, but your client wants 1.8 because he feels, as soon as those condos go up, business is going to be booming a little more in this plaza. There's going to be more foot traffic. There's going to be more need, right? We talk about supply and demand. There's going to be more demand for space used in this plaza. So there's different things that influence that you don't usually have to think about in residential, right? So we'll just go over a cap rate example right here real quick. John is an investor looking to buy an investment property. From taking real estate courses, he remembers that the capitalization rate is an effective metric in evaluating real estate properties. John identifies 3 properties with respective expenses, annual income, and market values, right? So the first one, market value is 1.5. Annual income is 100,000. The expenses are 7,500. Example number 2, market value is 4 million. Annual income is 250. The expenses are 15,000. And then example number 3, the market value is $1 million. The annual income is 100,000 and the expenses are 5,000. Okay. So we're looking at all these different ones to see which has the highest cap rate. When we see this one has the lowest market value, they have pretty good income though. They have almost as much income as example 1, but their expenses are quite low. That makes, example C having the highest cap rate, right? If you guys get confused though, if you're ever, I know if we throw a lot of this, I know we learned this in real estate school, to begin with, when we were taking our real estate courses, you forget about it unless you practice it on a regular basis, right? So if you guys are going through and you're getting really confused or you're getting nervous to take on a commercial client, just come reach out to me. We can go over this together. And once you do it a couple times, you'll get the hang of it and it won't be so daunting, right? I will say, don't give up any business. I know I had a guy in my last office say to me once, he was like, you know what? I had this client and I sold them a house and then they wanted help and it was a commercial thing. And I was like, oh my God, I don't do commercial. And I was like, basically, you're just giving up business at the end of the day. Like, don't be afraid to tackle it. You guys can do it. We learned about it. You just have to be a little more practiced in it, right? So summary, the cap rate is a profitability metric used to determine the return on our investments. The formula of cap rate is net operating income divided by the market value. The cap rate can be used to determine the risk of an investment opportunity. High capitalization rate implies higher risk, while low implies lower risk, even though you're not, paying off that capital as fast. The cap rate should be used in conjunction with other metrics. So keep in mind, don't just focus solely on cap rate. We do have those clients out there that just ask us, well, what's the cap rate? What's the cap rate? It's always their first question out of their mouth. But then you have to look at all the determining factors of whether it's a good purchase or, how you're going to evaluate this property if you're the listing agent. All right. Does anybody have any questions so far? No questions so far? Okay, I'm going to go on to paperwork, just so you guys can take a look at what some of this paperwork looks, what are the similarities, and how they might be different from things that we're doing on a regular daily basis. So the first thing is we have our working with a realtor, right? We know we always have to get that signed by our clients. So they have a very similar form, 815, working with a commercial realtor. This is the one you fill out the same way as you would with your residential clients, right? So you would put the acknowledgement by their names up here, whether they're the seller or the buyer, or the name of our brokerage, and then you get an initial, whether they're representing your interest or not representing. Obviously, we want representing our interests, right? So that's our first form that we fill out that looks a little bit different. And then we have the BRA. Now the BRA looks the same too. It's just mandate for purchase for commercial clients. So it's just a commercially branded form that has most of the same information, right? Between the buyer and the brokerage, what the property type is, what the geographic location is. The trickiness lies in definitely what the common commission is when you're filling it in. When they say if they purchase a property that's not on MLS or does not offer commission, what the commission is. Commissions are a lot different. I don't know if I touched on it last week with sale of business. Generally, the commission is 10%, right? You're offering the co-op 5. You might negotiate your side a little bit down to 4. For commercial property, you'll probably see it's more the 2.5. For commercial leases, you usually see 4% the first year lease, 1% for the balance of the term. So it's different. So it's hard when you're filling this out exactly what to say, but just know your product, know what your client is looking for, and see in that area what the regular commission is that they're offering, and fill it out to the best of your ability. Again, any questions you guys can ask me when you're doing it. So we're going to go on to agreement of purchase and sale for commercial properties. It looks pretty much the same. I actually wanted to grab my commercial clauses. I'll have to do it next week. It's on my computer there at my desk, just to show you what some regular commercial clauses are. So for the most part, the agreement of purchase and sale is pretty standard. It's the same. The buyer very often might not be a person's name, because a lot of times commercial clients are purchasing under a corporation or a business name, right? But you're going to figure that all out, and then you want to do what the address is. Again, we're talking about doing our due diligence, looking up the zoning. That's the one thing I wanted to touch on actually really quickly. So I'll remember this once I get the agreement of purchase and sale off our screen. But zoning is important as well, because you want to make sure that your client is purchasing it for the correct zoning. So I talk a lot about automotive, because this is my first, after I took over a lot of dad's business, I found myself delving into commercial really quickly. He did a lot of automotive shops. He just had a lot of, like, you know, guy friends who owned automotive shops, and zoning is super important. So you have to make sure you know the product that your client is going to be, like, what they need, what their needs are. So I know I touched on it last week, where I had an automotive shop, and it was one I was selling on Wilson was just automotive repair, fine, no problem. The other one I know was zoned differently, and I was trying to figure out why when I was listing it. And it was because he specialized in air conditioners and transmissions. And because of the different fluids that they use, and because of the environmental concern, there's different zoning. So if your client is an automotive client, for instance, and they're going to go purchase a property, you know, here at Kennedy and Lawrence, and he wants to do transmissions, but that is solely zoned for automotive repair. You have to be able to know that. You have to be able to know what the zoning is and help your client out, or at least put a clause in so we can do our due diligence and make the offer conditional on going to the city and making sure that that zoning covers what they want to do. And it's not just automotive. I just use that as an example real quick, because that has a lot of environmental implications with, like, the oils and everything they use. Like, I know paint booth is another one. You know, these automotive shops that fix and repair your car, they won't paint your car after they fix maybe your brakes, because they're not zoned for it. You have to go to a specifically zoned shop. So I'll show you how to check zoning real quick after we go over this document though. So basically it's the same thing. You're going to be putting in purchase price, the deposit. I find very often with commercial deals, and again, I wish I had brought my clauses into this, but you'll see that there's a further deposit. So what happens is a lot of clients will put in a hefty deposit, because these properties are usually, you know, up in the millions that you're dealing with if you're purchasing commercial property. And so your buyer client will put in a $50,000 deposit, and then they'll have clauses like, you know, contingent on checking the zoning, making sure my lawyer reviews the documents. And then you'll see very often a further deposit clause, which solidifies the deal, because people still want to see a good, like, close to 5% happening on the deal, but they don't necessarily want to just go and fish out $300,000 off the bat and put it down. So it's usually 50 to hold it for the conditions, and then a further deposit of maybe 100,000. So you'll see that very often in these commercial deals. Same rules apply for everything. Completion dates, title searches, those have to be done on business days. For the most part, this document is very similar. And again, if you're going over a commercial deal, I have clauses for everything. If you're unsure what to put, if you're doing vacant land, it's a different set of clauses I use. If you have commercial, you know, if you're buying just a commercial property, fine, it's a different set of clauses. If it's a commercial lease, it's a different set of clauses. So just reach out to me and I can help you guys walk through. The whole reason when I put all the kits together for the office that I didn't put commercial sale kits is because each deal is so vastly different that you really have to pick through what you need. And my fear was that if I put up the whole gambit of clauses, people would just submit that and not actually pick through what is necessary pertaining to their deal. So just make sure you touch base with me and I can help you make sure that your agreement of purchase and sale or what your listing is done correctly to the best of my ability. I just want to go log in really quickly here. So I can show you guys how to check zoning. This is important for everything, even for your residential, because you want to make sure what you're listing is listed correctly. So I'm just going to do a real quick search of a couple properties to show you.
Zoning on that too, it's not?
Yeah. Okay, so we're going to go to search properties. For those of you who haven't logged in yet, don't worry. I know I'm clicking through the screens real quick, but when you guys first get your logins, and that'll show you how to log in and where to go and find this. But in our search, you go down to your public records. Okay, and I'll just type in the office address and see what comes up. Okay, so 1286 Kennedy, we're going to click on it, right? So we can see here that it tells us property type is commercial. So we know in fact it's commercial. So sometimes you see those maybe houses that have been turned commercial and you're unsure if it's actually zoned that way. This is the way to go in and check whether it's actually residential or commercial if you're unsure. But here you can see commercial, property code and description, neighborhood shopping center, more than 2 stores attached. So that's what it's describing our building is, under one ownership without an anchor. It's okay, which just means it's under one ownership. They don't have an anchor store that might have interest in the property. And then you click on enhanced here and you can see the zoning code. Okay, now there's a million codes. You're not expected to know what all the zoning means, but at least you know what the zoning code is for this property now. So what can you do with that information? You can provide it to your client. You can go to this, call the city. You can ask for their assistance. Very often the city will say, okay, CRO 0.4, okay, here, they'll send you a quick email saying, these are all the uses. So what are the different uses? It might be, this can be used as a plaza. This can be, used as a grocery store. We know we have a grocery store at the end there. It can be used as office space, but they might not allow, I don't know, a vet or a pet grooming center. I don't know, for some reason, they might not allow certain things in certain areas. So if your client's purchasing this plaza and they want to rent the rest of it out, but they run a grooming shop for dogs, you want to make sure that that zoning allows their use, right? If you're just purchasing it as a landlord and you're going to rent it out to other clients, it doesn't matter necessarily what the zoning is, but you still need to be aware because your landlord needs to know what they're renting to not be in default of like what the city says the zoning is for. Right. So if you guys forget how to check that, you can always come back to me, but it's just in there in our public records, super easy to find. Right. So you can pretty much look up any address. I don't know, one off the top of my head. Let's see if 18, we'll do Martindale. I know that property exists at least, right? All right, 18 Martindale in the city of Toronto. So it's just a property, it's just a house. In E08, I believe. And you see this one now says residential, single family, detached, not on water. You guys should be checking this for all your listings to see what it is. Whether it's a condo, maybe. Let's look up a condo quickly. 60 Fairfax is one of my listings I just had up. Okay, we'll just pick any unit. Unit 103, residential condo, residential condominium. See, it'll tell you the unit level number. Let's just look at the enhanced a little bit, see what it says. Zoning MMG. So you'd have to see what that is. That's probably zoning for a low-rise building because that's what Fairfax is, right? So just get in touch if you're unsure. And that way you know that you're not mislisting something or you're not misrepresenting what you're purchasing for your client. Okay. I'm just going to go touch on this paperwork, rest of this paperwork real quick before we run out of time. Oh shoot, wrong screen. Here we go. Does anybody have any questions so far? Okay, so real quick, our confirmation of cooperation is the same for pretty much every deal. That's just the commission trust agreement between 2 brokerages saying, hey, I'm representing the interest of the listing or the seller. You're representing the interest of the buyer. Full disclosure always for commission paid, and it'll tell you how much commission is paid, right? So that form doesn't change. Corporation identification record. What do you need for this? So the corporation identification record, you're just going to put the property address and everything. It looks like our regular identification records, but in this, you're going to put the corporation name and address, the nature of the business, and then name who the directors are. How do you know? How do you know your client is a director of this property? You're going to ask them for their articles of incorporation, and you're going to read all the information off of there. What's the address? When was the corporation created? What's the corporation number? What's the nature of the business? And you'll see the name directors on there. And if your client's name is on there, you're good to go. The rest of this should be filled out the same way. Hopefully, like I said last week, everybody's filling out low risk forms, but if you're unsure about the transaction and it is something different, like 99.99% of the time, we're filling out Canadian corporation or Canadian client citizen in front of us present, right? And then here's the only difference is that normally it just says residential when we're filling out the ones for our clients. This is going to say whether it's land for commercial use, commercial property, or other, right? And go back here. The listing agreement is again very similar. Okay. For commercial, though, you have to make sure you pull the right form. Treb's really picky about it. You pulling the right forms, you listing things properly. So listing agreement commercial between the brokerage and the seller. Again, you're going to name the property. You want to say what the duration of the listing is, the list price, right? And then you're going to go over your MLS data sheets. So your MLS data sheets, there's different ones in there. Let me see if I can pull one up just to show different questions it asks for listing a property here. Okay, got that share on for you guys. So we'll close this window. We don't need public records anymore. We're going to go to the home page. And then we're going to go into web forms. And I'm going to try and pull up an MLS data sheet so you guys can see different things. So normally we're asked, whether it's a detached home, private driveway, all those fun things. It asks us some pretty interesting questions that you might not know, but you have to work with your client to figure out what the proper way of listing it is and what the proper answers to those questions are. So let's see if we can do commercial. There we go. MLS data form, commercial sale. Okay. Again, like I say, I did last week intro to commercial, this week intro to commercial. Between sale of business and purchase of property, there's a whole other section of leases and subleases that we can get into. That's why I didn't put the templates up, because literally if I can spend 3-4 training sessions on just an intro to a little dabble in commercial, then I didn't just want to put up those blank kits for you guys to go and be lost in. So the MLS status sheet, anything highlighted, as we know, is mandatory. So you put in all the things you can, like the assessment roll number, the area. So we'll just say it's Durham, say we got one in Oshawa, community, Samac, whatever. You fill out all this information. But then we're going to go here, lot front, lot depth. Okay, so normally in residential, we used to 50 by 150. We know we're talking about the lot. In residential, they'll ask you, well, is that the lot, or is that the building, or is that the unit? Because in commercial, you can purchase different things, whether you're purchasing a lot, whether it's the building on it that the size, the lot front and depth is referring to, or whether it might be a commercial condo. So is it the unit, right? And then again, feet, meters, acres, that's pretty standard on our regular forms. The taxes, the commencement date. I'm trying to get to all these different things here. Okay, so here, commercial retail. Do not use for sale of business. Okay, so last week we talked about listing a business. You're going to say commercial retail property. That means it's the physical property for sale. But say I'm just selling the auto mechanic shop, but I don't own the building. I'm going to do sale of business without property, or I can do sale of business with property, right? So you have to know what category it's falling into. Automotive related, health and beauty, hospitality, all these crazy categories we don't have in regular residential that are on this MLS data form, right? We can sell a store with an apartment or office above it. We can sell an investment. We can sell an office. It's industrial. Maybe we're loading a farm. Maybe it's a piece of land. You have to know what product it is and then fill this out. They're going to ask you also not only what the size of the property is, but what the breakdown is. So I get a lot of questions about this. A lot of people ask me, office area, industrial area, retail area. Well, what does that mean? Well, for instance, say you have an automotive shop, but most of it is industrial area where they're doing the work on the body. But you know, when the client comes in, they need a little bit of office space to come make their payment and talk to the mechanic. So maybe your office area is 10%. So I might put in here 10%, right? And my industrial area is, let's say it's 80%. Okay. And then maybe the auto mechanic has a little area where he sells windshield wipers and he has a little store, you know, and displays some tires that are for sale. Maybe that's 10% of the store. Okay. It always has to equal 100, but basically you're going to figure out what the breakdown is. How do you do this? You got to ask your client for floor plans and drawings. You have to figure out what the percentage is and do it that way. Sorry, Saraf, did you have a question?
Hey, Christine. Yeah. So sometimes clients themselves are, you know, maybe it's because somebody passed away, so now they've taken it over, but
Now they don't know.
not, yeah. So like they're not sure either where to get these documents or like, yeah, like where to get these documents, or so how can we what can we advise? Like where can they get these documents?
Like what, for like the floor plans and stuff like that?
Let's say surveys, profit statements, or any like, you know, like past valuations, past rentals, like just financials of any kind, like, you know, it's
so I have all kind of different answers. If they don't know, if they don't have a survey, a lot of things get sold without a survey. That's fine. You have to let your client know what the risks are if they're purchasing something without a survey, like, you know, disputes on lot lines, fence, you know, if they plan on expanding the building, they're going to need that to get that survey drawn in order to get permits from the city, etc.
Well, what I mean is, what about like, what if I'm the listing agent and it's like the seller is unsure, like let's say the buyers are asking us for this the surveys and everything, and like the seller is unsure, you know.
So you'll have to explain why there's no survey to the buyers. As listing agent, if say the grandmother passed away and the granddaughter has no clue what the rents are, you're going to have to do some door knocking, talk to the clients in the building, figure out what the rents are. As far as like what else were you asking, like
or
zoning?
Just go to the city, right?
Yeah. Zoning.
What does it take to get a survey like made? Like is it,
you have to get a surveyor to come out and draw it, and it can cost you like 1,500 upwards.
Okay.
Yeah. They have to come out and draw it again. Sometimes you can luck out, so you always start. Okay, so anytime I can't find a survey, just a hot tip, even just for your regular residential transactions. First thing I say to my clients, if they bought, say within the last like 5 years, if it's 20 years, it's a little more difficult. I've had some success where you go, okay, what lawyer did you use? Okay, you now call them and say, you know what, I bought this property 2 years ago and I have survey written in my agreement of purchase and sale, and I was never provided the survey. Very often they have it on file and they just forgot to give it, or they didn't put it with the package. Sometimes I might say, okay, I need a week. It's 3 years ago. Now that's in archives. I'll get it for you. So the lawyer is the first resource. After that, sometimes the city has it on hand. Sometimes you luck out. If you walk in, they might take a photocopy for you, or at least of the site plan, if it's not be the survey. And then the last resource is calling a surveyor to have it drawn. Yeah, but there are some ways you can try and source it if the seller doesn't have it, or if your seller doesn't have it and you're listing the property. If they don't have floor plans and whatnot, you're going to have to go in and measure, just like you do with residential resale. You should be measuring anyways. I always say to people, don't rely on previous listings. Go and measure at least a few rooms to make sure that one's accurate. But a good tool is one of those laser measures, because, you know, back in the day, I used to literally take a measuring tape with me, but that saved my life. Now the laser measures, take them with you. So even if it's a big property, at least you can measure it fairly quickly and figure out, okay, you know, this is 100 square feet and this is 10 square feet and this is 10 square feet. So figure out what the percentages are of like the office space versus the industrial space, and measure it out if they don't have access to that information. There's always ways to figure it out. If you're totally lost, like I say, each thing is so specific and different. Just call me and we'll figure out a way. We'll think of a way to, you know, get what you need, right, to list the property. I think someone wrote in the chat there as well, but I'll check it in 1 second. I just wanted to look at this paper and say, you know, here it says, do they have sprinklers? Are the utilities available? What's the water? What's the heat type? Which we see a lot of weird things that we don't see in residential. Gas, forced air, open or closed. People are like, what's that, right? Do they have grade level ship doors, right? Is it at shipping level? Do they have truck level ship doors, you know, where they're a little higher and they can walk right off the truck? How many do they have? What's the clear height? Sometimes height is really important, depending on racking they might have, you know, or clear height for machinery they'll be pulling into the building. So definitely a lot of things to take into consideration. I personally enjoy it because it takes you away from the mundane every day. So I encourage you guys to try it, because who wants to sell the same thing over and over and over again? But it does require a little more patience, a little more research on your part. Oh, it's just you. Hey, Christina, I have a question. Did I answer it, Sarah?
Yes, yeah, thank you so much.
I was too busy talking. I saw your hand up after the fact, so.
No worries.
So yeah, anybody else have a question? Everybody good for this morning?
Pretty good.
All right, Thursday, I'm gonna do, again, for the new agents and all agents, how to deal with rental properties. What are the rules behind the rental properties? How to deal with the landlords, how to deal with the landlord and tenant board, what notices we need to serve when we do sale of a property with a tenant in it, stuff like that. So yeah, so I hope to see you all Thursday evening. Everybody have a lovely week.
How do you approach a situation where